What if the biggest psychological flaw that makes most people lose money in crypto is the exact same trait that creates millionaires? It's not a weakness, it's a superpower they hope you never figure out. In this video, I'm going to show you the specific cognitive bias the crypto elite use to ignore risk and build fortunes in a market that feels like it's designed for you to fail. This isn't about chart patterns or finding the next 100x mem coin. This is about the software running in your head. Because in the digital wild west of crypto, the market isn't just trading assets, it's trading on your emotions. Fear and greed aren't just feelings, they're the strings that make puppets out of 99% of investors. But for a select few, those strings are cut. They've turned what looks like a human defect into a machine for creating wealth. And by the end of this, you'll know exactly how they do it. Let's be real for a second. For most people, the crypto journey is a short, brutal, and expensive lesson in psychology. It's a tragic cycle we see play out over and over again in millions of accounts. It starts with that spark of irrational exuberance. You hear stories, maybe from a friend or some random person on the internet, about easy money. Just put your money in and watch it double or triple. It feels like you found a cheat code for the financial system. This is the first psychological trap, the availability heuristic. Our brains are wired to make decisions based on what's easy to remember. We don't see the millions of people who lost their life savings. We see that one viral post of a brand new millionaire, the flashy Lamborghini, the headline about a teenager turning $1,000 into a fortune. These vivid, exciting stories create an illusion that this kind of success isn't just possible, but likely. So you dive in, you buy. And for a little while, it actually works. The market is climbing. Green candles flicker on your screen, each one a tiny hit of dopamine. This is where the second trap springs: overconfidence bias. A little bit of early success can make us feel like geniuses. A study of professional fund managers found that a statistically impossible 74% believed they were above average at their jobs. In crypto, where there are basically no barriers to entry, this bias gets supercharged. You didn't just get lucky, you're a natural. You've cracked the code. This feeling is intoxicating, but it's an illusion, carefully engineered by the market itself. The market has a nasty habit of rewarding bad behavior just enough to make you feel invincible, right before it yanks the rug out from under you. You start taking bigger risks, maybe jumping into assets you don't really get, chasing those higher and higher returns. You see a coin pumping and your brain just screams, "Don't miss out." This, of course, is FOMO, the fear of missing out. According to a December 2024 survey from the crypto exchange Kraken, a staggering 84% of crypto investors admitted to making trades based on FOMO. And 63% of those surveyed said those emotional decisions hurt their portfolios. FOMO isn't just a silly mistake. It's a deep seated herd instinct that was great for avoiding predators on the savannah, but is absolutely catastrophic in financial markets. And then the music stops. The market turns. That euphoric climb becomes a terrifying freefall. Now, a new and even more powerful emotion takes over: fear. The fear of losing everything you've put in turns into pure panic. This triggers what psychologists call loss aversion, the tendency to feel the pain of a loss about twice as strongly as the pleasure of an equal gain. Losing $100 feels as bad as gaining $200 feels good. This completely warps our decision making. That chart, once your source of joy, is now a source of extreme pain. Every red candle feels like a punch to the gut. Driven by this intense fear, you do the only thing that feels rational. You sell. You capitulate. You get out to stop the bleeding. You sell at the bottom, right as the smart money, the whales, the very people who were patiently waiting for this moment, start to buy. They soak up your panic sold assets at a huge discount, just waiting for the cycle to start all over again. This is the slaughterhouse. It's a system that runs on predictable human emotions. The market's volatility is practically built to provoke greed on the way up and pure terror on the way down. It's a psychological gauntlet that most people are just not equipped to handle. They treat the market like a casino, a place for a quick win, when it's actually a battlefield of minds. The weapons aren't charts, they're cognitive biases and emotional triggers. For the average investor, their own mind is their worst enemy. They're playing a game they don't understand against opponents who have mastered it. Conventional wisdom says you should suppress these emotions, be more disciplined, fight your own human nature. But what if that's completely wrong? What if the secret of the crypto elite isn't that they've gotten rid of their psychological flaws, but that they've learned to harness one so powerful it makes all the others irrelevant? The great lie of the market is that success comes from being rational. Traditional finance is built on this idea that we're all logical robots making decisions based on facts. But crypto proves this wrong every single day. This is a market driven by stories, by belief, by raw, uncut human emotion. Trying to be a robot in a zoo of screaming emotional apes is a losing strategy. So, what do the crypto millionaires, the long term holders, the whales do differently? They don't suppress their emotions or ignore their biases. Instead, they embrace a psychological trait that, on the surface, looks like a catastrophic flaw. It's a trait that some researchers have even linked to what's known as the dark tetrad of personality: narcissism, Machiavellianism, psychopathy, and sadism. Now, hold on. This doesn't mean every crypto millionaire is a psychopath. That's a wild oversimplification. But there's a kernel of truth here. A 2024 study in the journal PLOS1 found that crypto ownership is correlated with higher scores on these dark tetrad traits. Successful investors in this space often operate outside the normal spectrum of emotional responses. The core of their success lies in what we can call ideological conviction as an operating system. This isn't just believing in a project. This is a profound identity level commitment to an idea or an ecosystem that is so powerful it overrides the primitive emotional parts of the brain that trigger fear and panic. To the average person, this level of conviction looks delusional. It looks like a flaw. It's a refusal to accept reality when the market is crashing, when headlines are screaming that crypto is dead, when every rational signal is telling you to sell. It's the stubbornness to hold on for dear life, hodl, even when it feels like financial suicide. But for the crypto elite, this flaw is their greatest superpower. Why? Because the crypto market isn't a test of your intelligence. It's a test of your conviction. The volatility that shreds the nerves of a retail investor is just noise to an ideologically driven holder. Market downturns aren't a crisis. They're an opportunity to accumulate more of the asset they believe will fundamentally change the world. Their belief isn't tied to the current price, it's tied to a long term vision. Think of it this way: for the retail investor, a 50% drop in price is a 50% loss of their money. Their identity is tied to their portfolio's dollar value. For the ideological holder, a 50% drop is a 50% discount on the future. Their identity is tied to the asset itself. This mindset short circuits loss aversion. The pain of loss is numbed because in their mind, they haven't really lost anything as long as they still hold the asset. The only way to truly lose is to sell, to abandon the ideology. This is the contrarian truth. The psychological trait that looks like stubborn, irrational delusion is the very thing that provides the emotional armor needed to survive and thrive in a market designed to break you. They aren't emotionless. Their emotions are just tied to a different anchor. While the masses are anchored to the fleeting price, the elite are anchored to a deep, unwavering ideological belief. And in the chaotic seas of crypto, having a steadfast anchor is the only thing that keeps your ship from being torn apart. This ideological conviction isn't just some vague feeling. It's a psychological framework built on three pillars. For the uninformed, these are liabilities, but when they're combined and weaponized, they become an unstoppable force. Let's break them down. Pillar one: weaponized confirmation. Bias. Confirmation bias is our natural urge to find and favor information that confirms what we already believe. For most investors, this is a ticket to getting wrecked. They buy a coin, fall in love, and then only consume information that validates their decision. They live in a social media echo chamber, ignoring red flags and calling any negative info FUD, fear, uncertainty, and doubt. They build a reality on wishful thinking, and when that reality implodes, they're left holding the bag. The crypto elite, however, flip this bias on its head. They don't just passively look for confirming information, they actively build their entire world around their core thesis. It starts with deep, almost academic level research. They read the white papers, they study the tokenomics, they analyze on chain data, and they assess the development team. They build a foundational belief based on months or even years of due diligence. Once that foundation is set, confirmation bias becomes a feature, not a bug. It acts as a powerful filter. Instead of being swayed by the daily drama of market sentiment, their highly informed confirmation bias lets them focus only on what matters to their long-term thesis. Is the network's user base growing? Are developers still building? Is the core value prop still intact? Price becomes a secondary, almost irrelevant data point. Then they use social confirmation. They embed themselves in communities of other high conviction holders, often closed circles of investors and developers who constantly reinforce the core ideology. This social validation is critical. It creates a powerful sense of shared purpose that makes it psychologically easier to withstand a brutal bear market. When the whole world is calling you an idiot, being surrounded by other brilliant, dedicated idiots makes holding on not just possible, but a point of pride. Pillar two, cultivated narcissism and the need for control. This might be the most controversial pillar, but it's impossible to ignore. As mentioned, studies have found that crypto investors tend to score higher on traits like narcissism. For the average trader, narcissism is a disaster. It shows up as overconfidence, an inability to admit you're wrong, and taking stupid risks because you think you're special. The narcissistic trader thinks they can outsmart the market, and that hubris almost always leads to ruin. But for the crypto elite, this trait is channeled differently. It's not just about feeling superior, it's a profound, unshakable belief in their own judgment and their ability to control their own financial destiny. This is a direct response to a deep distrust of traditional centralized systems. For them, crypto isn't just an investment, it's a declaration of sovereignty. This cultivated narcissism gives them the guts to bet against the entire global financial establishment. It provides the mental strength to stand alone, to believe they see a future that the sheep and the mainstream media can't. When the market tanks, their inner voice isn't, oh no, I was wrong. It's, this is a test, and only the truly visionary like me will pass. This mindset is tied to the psychological need for control. The chaos of crypto is terrifying if you feel powerless. But for this group, holding their own keys and operating outside the old system provides an immense sense of control, even in the middle of a storm. They aren't victims of the market, they are building a new one. This reframing is incredibly powerful. It turns the anxiety of volatility into the thrill of rebellion. Pillar three, strategic detachment and the gamification of risk. The final pillar is the most nuanced. It's the ability to be emotionally detached from the dollar value of their assets while being deeply invested in the project's success. For the retail investor, every dollar up or down is personal. Their mood is tied directly to their portfolio balance. This is why they make impulsive moves. Greed and fear are chained to the numbers on the screen. The crypto elite achieve a state of strategic detachment by gamifying risk. They view their portfolio not as a lump sum of money, but as a collection of strategic bets in a long term game. They often use a barbell strategy. On one end, they have their core, high conviction holdings that they will never sell. This is their ideological anchor. On the other end, they make a series of small, speculative bets on new, high risk projects. Psychologically, this is a game changer. By allocating a small percentage of capital to degen plays, they satisfy their appetite for risk in a controlled way. This stops them from doing something reckless with their core holdings. The small bets are expected to go to zero. If one does a 100x, it's a bonus. If it fails, it was a calculated, affordable loss, the price of a ticket to play the game. This structure allows them to be emotionally numb to the swings in their main portfolio. An 80% drawdown in their core holding doesn't trigger panic because their mental model already accounted for this. Their investment horizon isn't next month, it's the next decade. They aren't trading, they are accumulating. This is the ultimate defense against the market's emotional manipulation. You can't manipulate someone who is fundamentally detached from the price. You can't scare someone who has already accepted a 90% loss as a temporary detour on the path to a 10,000% gain. Understanding this is one thing, doing it is another. You can't just decide to be an ideologically driven holder overnight. This mindset is forged. It requires deliberately rewiring your own mental software. Here's how you can start. Step one, define your ideology, the anchor. The whole framework rests on a foundation of deep conviction. You can't fake it. If your only belief is, I want to get rich quick, you'll be shaken out at the first sign of trouble. You have to find your why beyond the money. Become an expert. Pick one or two projects that genuinely fascinate you. Go deeper than anyone else you know. Read the entire white paper, not just the summary. Join the developer calls. Understand its history, its tech, its competition, and its vision. Your conviction has to come from your own research, not from some influencer's opinion. Write an investment thesis. Force yourself to articulate your ideology. Write a one-page document explaining exactly why you're investing in this project for the long haul. What problem does it solve? Why will it win? What's the 10-year vision? This is for you. When the market is crashing and your emotions are screaming at you to sell, this document is your anchor. Reading your own logical arguments is a powerful antidote to fear. Set an unrealistic time horizon. The best way to detach from short term noise is to extend your time horizon to a point that seems almost crazy. Don't think in months, think in years or even decades. Ask yourself, if my thesis is right, what could this be worth in 2035? This mental trick makes daily or even monthly price swings feel insignificant. Step two, engineer your environment, the shield. Your brain is constantly influenced by your surroundings. To protect your conviction, you have to become the architect of your own information and social world. Curate your information diet. Unfollow the hype merchants and panic mongers on social media. Replace them with the core developers, founders, and deep thinkers in your chosen ecosystem. Your feed should be a source of signal, not noise. It should reinforce your long term thesis, not expose you to short term drama. Join the right community. Find the community of builders and long term holders. This might be a specific Discord, a forum, or a private group. Engage in real discussions about the technology, not just the price. This builds the social confirmation you need to withstand doubt. Automate and obscure. Make it hard for your emotional brain to mess things up. Set up automated dollar cost averaging, DCA, to buy regularly no matter the price. Then move your core holdings to cold storage. A hardware wallet adds a critical layer of friction. To panic sell, you'd have to find the wallet, plug it in, enter your PIN, and make the transfer. That process alone is often enough to short circuit a bad impulse. The goal is to make holding easy and selling hard. By the way, if this is making sense to you and you're starting to see the market as a psychological battleground, do me a favor and hit that subscribe button. We're all about pulling back the curtain on how this world really works. And in the comments below, let me know which cognitive bias has hit you the hardest. Is it FOMO, loss aversion? Admitting it is the first step to mastering it. Step 3, systematize your risk. The pressure valve. You can't just eliminate the human desire for risk and reward. If you try to suppress it, it'll just erupt in a destructive way. Instead, you have to give it a controlled outlet. Implement the barbell strategy. Formally divide your portfolio. Put 80 to 90% into your core, high conviction, hold forever assets. This is your anchor. Then allocate 10 to 20% to a speculative bucket. This is your playground. Use this smaller pot of money to experiment with new narratives or trade meme coins. Mentally write off your speculative capital. This is critical. You have to mentally accept that the money in your speculative bucket is already gone. It's the price of admission to the casino. This creates an emotional firewall. Losses in this bucket won't hurt because you already accounted for them. It stops the gambler's mentality from infecting your serious investments. Define your rules of engagement. Even with your play money, you need rules. Never add more to a losing speculative bet. Take profits at set levels. For example, if a risky play doubles, sell half to get your initial investment back. Now you're playing with house money, which further detaches you emotionally from the outcome. By defining your ideology, engineering your environment, and systematizing your risk, you're not just learning a new investment strategy. You are building the psychological armor of a long-term crypto survivor. You're turning your mind from a liability into your single greatest asset. Conclusion: the choice. Crypto is a paradox. It's a world filled with utopian talk of freedom, but it operates like a ruthless psychological arena that chews up and spits out most people's money. The market is a mirror that reflects our deepest flaws, our greed, fear, impatience, and gullibility. 99% of people, that reflection is horrifying, exposing a lack of emotional control that leads to devastating losses. But now we've seen the other path, the path of the crypto elite, the whales, the diamond-handed holders. Their secret isn't that they're flawless, it's that they have learned to master a single powerful flaw, an all consuming ideological conviction. This conviction, built on deep research and an almost narcissistic belief in their own judgment, becomes their operating system. It reframes everything. A market crash isn't a loss, it's a discount. Volatility isn't a risk, it's an opportunity. Fear isn't a signal to sell, it's a signal that others are weak, which reinforces their own strength. They don't fight their human nature. They channel it. They build systems, cold storage, automated buys, barbell strategies that shield them from their own worst impulses. They create an environment that nurtures their belief and starves their doubt. They play a different game on a different timeline with a different set of rules. In the end, it all comes down to control. You cannot control the price. You can't control the narratives. You can't control the whales. The only thing you can truly control is your own mind, your framework for making sense of the chaos. So you have a choice. You can be a leaf in the wind, tossed around by market fear and greed, Or you can start the hard work of forging your own psychological armor. You can choose your ideology, build your conviction, and anchor yourself so firmly that no market storm can move you. The path isn't easy. It requires discipline, patience, and a level of stubborn self belief that will often look like madness to the rest of the world. But in a market designed for your failure, a little bit of madness might be the most rational thing you can have. Thanks for going down this rabbit hole with me. If this resonated with you, hit that like button and make sure you're subscribed for more content that challenges how you see crypto. Now, I want to hear from you. What is the core thesis of your number one long term crypto holding? Share it in the comments below. Let's see the conviction.